Hi, everyone, and welcome to this short session on this short trading week with the 4th of July coming up. I am leaving on vacation this week and spending time in the nation's capital actually to watch the fireworks there with my family. And so I wanted to get a short update out to you because there's lots going on this week. So I hope you'll take the time to watch this very short video just to give you a few insights to what's happening this week. First of all, just a little recap on last week. The big news, obviously, the Supreme Court upholding the constitutionality of the healthcare law. And we saw a lot of movement, not necessarily related to that, more to the European debt crisis and their bailout of the banks. We saw a lot of movement last week. So Friday was an incredible day on the weekly options for any of you that might have looked at it. It was an unscheduled event, but nonetheless news that moved the market. This is this week's news calendar, so let's take a look real quickly. The things I want to point out, there's a couple of important things. First of all is the Wednesday the 4th is a day off from trading, so there's no market there. The other thing is that on Tuesday the 3rd, there's only a partial day. Okay, so I think it's like a half day of trading, so make sure you understand that. Now, the big news will be there's nothing going on Monday to worry about, but the big news is on Thursday the 5th, and we've got the ADP non-farm payrolls report, followed by with the jobs report on the first Friday of every month on the 6th. So your last chance to trade that's an 8:30 a.m. announcement. Your last chance to trade that is the close of trading on Thursday. So make sure you watch that. Now, I think the ADP non-farm payroll report is going to give you kind of a heads up. That comes out again prior to the market open. It'll give you an idea of what the market's going to do. You may get some movement there anyway. But this is the big one. The last two jobs reports have had dramatic moves, many options, doubled, tripled, quadrupled on the next day when that news came out. Now, there's one other I want to point out is natural gas been getting a little more attention here, and the storage report comes out at 10:30. These are all Eastern times, 10:30 on Thursday, and there's an easy way to trade that. So let's take a look. Those are our announcements for the week. Again, a little heads up on the ADP for Thursday. Not a lot going on till the holiday, but be back at the computer taking a look here. Natural gas may have a little play that day, and the big granddaddy of weekly announcements, or excuse me, weekly options events is the non-farm payrolls that comes out on Friday. So let's take a look. First of all, let me get rid of all that. And then I want to just kind of show you, looking at a couple ways you might trade this. This is the paper trading portfolio, just watching a few things. Pretty flat on everything. If you're doing the cover call trades, everything that we were following last week finished out of the money, so I reset the positions on these four stocks on Monday with the new options. You can see the stocks right about where the options are, so on each of those plays we're kind of looking at it. It's kind of a non-issue. We haven't had a lot of movement one way or the other. I just put these in there. It's a volatile stock, kind of a hedge, and it's really kind of crushed this particular account because we've seen it drop from $17, almost $18 down to $14.46, and so that's one we'll probably look at. But what I want to do is just kind of go to the options chain and show you the stocks that I'll be watching on Thursday and Friday. The first one that I mentioned is the natural gas UNG. And natural gas, again, trading right now, UNG at $19. It's a nice round number. It's moved up pretty dramatically over the last several weeks, and specifically over the last week or two. So a little attention being paid there. So you can kind of follow that. Here's the this week's options. Remember, the news comes on Thursday at 10:30 Eastern time in the morning. So there is enough time to actually enter a trade before that announcement on Thursday morning if you're interested in natural gas. At $19, the reason I like this is because it doesn't take much for it to move after the announcement, and the options will be really cheap. It shows, like I said, it puts at 43, the calls at 46 with the stock sitting right at that strike price. So I wouldn't do strangles, which would be 18 and 20. I'd do the straddle if we stay around here. Look for that. If you have to do a strangle, if it's somewhere in the middle, again, these prices will be a little cheaper later in the week. and you should be able to set that up. If we get a little move, it could be one that works out pretty well. Things are reasonably bullish for natural gas. It's been so depressed. So every little bit that's good news, the market moves. So the upside potential is probably, in my opinion, greater on the upside than the downside. But if they say all those stockpiles are big again, then you could see probably a decline there. But again, a very cheap weekly options on UNG. So that would be one to take a look at for Thursday morning. If you're following that, you can track that and take a look at how that goes. And especially if you're learning how to do this, these are great little paper trades to give you an example of how things work. Now, on the jobs report, the things you want to look at, really the kind of markets that I like to use when the economic reports come out are things like the financials, the overall market, volatility, and precious metals are the four that I like to focus on. So let's take a look. First of all, at the overall market would be something like the SPY. You can pick any one of the broad market indexes. The SPY has dollar strikes. The options are relatively cheap. And again, these would all be position yourself before an announcement on Friday of the jobs report. Typically the Thursday's close, so you do this in maybe the last hour, half hour of the day. But you can see here with the 136, you can see the puts at 76, the calls at 90. So it's going to come down a little bit. Obviously, it'll be a little cheaper, but that Thursday report might be somewhere for a straddle around $1.50. So the combination of the put and the call. Now this is one where you could do the strangle, which is spread it out a little bit. The strangle would be, if we were doing it right now, we wouldn't because they're still too far in advance of the news, but the 135 puts, the 137 calls, and you can see that 43 cents and 41 cents. So it's a lot cheaper, and it'll be even more cheap come Thursday at the close. So maybe you can get these for a combination of, say, 40 cents instead of a combination of 80 cents. Anyway, so take a look at that, follow that, and be on top of that. That's the broad market one. The next would be precious metals. The reason I like this one is because it has strike prices at every 50 cents. So you can see the strike prices jump by 50 cents each time. And if we look at that, it makes it really easy to do a straddle because you can almost always find one that's really close to that. So 44.53, you're looking at 44.50s, 57 cents on the puts, 61 cents on the calls. And again, that makes it, those will be even more have gone down more. They'll be less expensive come Thursday. So that's how I like to play the precious metals. The next one is the financial sector. Obviously, anything to do with the economy, banking. There's some banks that are coming up, but everybody's a little worried whether this thing happened in Europe with the bailout of the banks. It just seems like it's a one-day rally, and then everybody says, no, it's just a short-term solution. It's not going to work. And so this is an index that tends to move. So we're sitting right at 90, much more expensive. So the way I like to play more expensive ones, if I play them, is to spread it out even more. So instead of just doing a straddle at 90s, 90 puts and 90 calls, that'd be almost a $4 trade. You could spread this out. This thing can move $2, $3, $4, $5, $6 if we get a dramatic move in the market. So it's one that has lots of range. So the cheaper way to do it is to spread it out a little bit. Now there's a little higher risk because it's got to move, but you could go out to the 88 puts and the 92 calls, and you could see you could construct that trade today for about $2.20. It'll be cheaper. That'll come down a little bit again on Thursday, but that's the one I like to play for the financial sector. The final one is volatility, and that would be the VXX. And the VXX has really taken a tumble over the last couple of weeks as the markets have moved up. And so we look at that. Like I say, I'm more inclined to look at the VXX as just a call play because if the market tanks, this is what spikes. And so, but it's so cheap, you could play it both ways if you wanted to. We're at 14.53, so the 14s on the put side, you can look how cheap these are, 17 cents and 25 cents on the call side. So, and again, those will even be cheaper come Thursday before the announcement comes out. So a nice way to play volatility. If we do get some unexpected news, the market volatility has the potential to spike, and that's an easy way to play that. You don't need you can see today, even today, it's down 67 cents. these trades. If you just look at what happened today, down 67 cents, that means $15 puts. Let's just see what they've done just in one day. This is Monday. And this should bring up a chart that shows the daily movement. I'll bring it up as a daily movement of that particular option, the $15 put. So you can see it's trading for 70 to 72 cents, 71, 73. It just switched. And let's take a look at how that's moved, not for 1 year, but let's look at the last 4 hours of the trading days, just today since the open. So I'll go down there. You can see. Actually, let's look at 3 days, just so I can get a nice round, easy chart to look at with clear bars. There we go. So again, opened up today. It opened right at there. So it opened about 60 cents. It's gone as high as 75, but it's also been as low as 30 cents. So 30 cents to 75 cents. Again, I'm more than double just today from the low to the current price. Pulled back a little bit here recently. Anyway, so you see in way we look at those things, the way we like to follow the weekly options. Again, this is one of those big potential weeks, so I wanted to alert you before I leave on vacation. Be patient with me on emails. I'll have everything responded to before I leave. And if you do have any questions, I will be watching, because I'm not going to miss this one. I'll be watching this on Thursday and Friday, even from my hotel, and hopefully I'll have some success. We'll talk about this. I'll send a recap afterwards, just in between, a little short video recapping what happened, good, bad, or ugly, so we can kind of track just those ones that I mentioned here that you can follow. So anyway, there's a little update for you. A big week coming up with the jobs report on Friday. Just wanted to alert you. I hope you have a great 4th and a great week trading. And we'll follow up on this next week with a real short video when I get back from vacation, just to let you know how things went, even if you didn't trade. So have a great week. Happy 4th of July. Be safe out there, and we'll talk to you again soon. Bye-bye.